Well, good morning. Make sure I got the right camera. Doesn't seem to be moving. Hello. What are we doing? What are we doing? Good morning. Don't know if y'all can hear me. Let's see if I'm on my other screen. It does seem like it has just paused. Pause for the calls. Let's see what we're doing. Look like we're just sitting still. Let's see what we're doing. Like we're just sitting still. Let's see what we're doing. Like we're just sitting still. Let's see what we're doing. Like we're just sitting still. Let's see what we're doing. Okay, I think we got some motion now. Okay, I think we got some motion. Wow. Well, here we are this morning, bright and early on a Thursday, right? It is Thursday. The week makes it real weird when it's a short week. It's weird to get going when you got a short week. I didn't really want to go there first. I wanted to check out what the pre-market is showing already, because the pre-market is showing some stuff already because data came in, but what came in the data did not seem to be all that great. The Dow didn't love it anyway. The Dow did not love it. Here we are. The VIX is at 1431 this morning. We got a couple minutes before the market opens. The VIX is at 14.31. When we look here at the Yahoo Finance says the U.S. economy grew at a slower pace than initially thought in quarter one. Why NVDA stock surge doesn't bode well for the market. And I read this article, a little bit of it, and he talked about basically, generally when NVIDIA goes up, the entire market goes up. But when NVIDIA had earnings a week ago, last week, that didn't happen. So while usually NVIDIA would take the market with it, in this case, the market didn't move, but only NVIDIA moved. So that isn't necessarily a great thing for the market, because it means everybody else is basically operating opposite of their, normal movements. Good morning, Jermaine, Janae, and Tanya. Good morning. Good morning. So, that's an interesting piece. Some folks are the only name we're hearing. I've seen a few memes that show like NVIDIA propping up the whole market, or NVIDIA, a person has got another person on their shoulders, and they're sure basically the person here is like NVIDIA, and the whole market is the other person that's on their shoulders, and it's like, it's not the way that's supposed to go. Dow futures slides again as rates fears prey on the nerves, and billionaires from coast to coast are warming up to Trump. I will leave that alone. Stock Salesforce earnings, Peltz's Disney State, three things. Okay. So what we did have this morning, like I said, was GDP data, and our pre-market now, the Dow is down 0.86%. S&P futures down, Dow futures, not the Dow, Dow futures. S&P futures down 0.32%, NASDAQ futures down 0.24%. Oil is red, and so is 10-year bonds. Those are red as well. Salesforce shares tumble 17% on the pace for the worst day since 2008. Salesforce might present an opportunity for some trading today. Anytime, we don't want to capitalize on folks' issues. But when the opportunities present themselves, then we're like, well, who's one to look a gift horse in the mouth? Yeah. So Kohl's stock plummets 20% after massive earnings. I'm not really sure why Kohl's is even still open. Anybody shop at Kohl's? I'm like, what is going on in here, right? Foot Locker stock surges 13% as turnaround shows signs of life. Well, this is good, because Foot Locker used to be like the place, and then it became no man's land. Boeing has 90 days to hand in a safety plan to the FAA. Oh, their 90 days is up. Ooh. Here's what to expect. Oh, my. 90 days, they didn't come out. Okay, the biggest analyst calls Apple, NVIDIA, Salesforce, Amazon, Okta, Eli Lilly, and Kava. Dow loses 300 points as Salesforce shares drop. I don't know if the Dow is falling just because of Salesforce. It always gets me interested when they like combine these things that may not be related and make them related. Oh, Tanya says I like Kohl's. Oh, sorry. I've gone in Kohl's a few times and been like, what's happening in here? What is going on in here? So we'll come back. There we go. Our data for today, Thursday, preliminary GDP quarter over quarter, it actually came in green. They thought it was going to be 1.2%, it was 1.3%. Last time it was 1.6. So I guess that's what makes it green. It was better than last time. Unemployment claims 219,000. The market is open. And 216 was what it was last time. Goods trade balance, negative 99.4 billion. That's not a good thing. And see how red it is, red. Wholesale inventories month over month. 10 o'clock, pending home sales month over month is coming up at 10:30 natural gas storage, crude oil inventory at 11, and 12:05 FOMC member Williams will speak at 12:05. I started my computer over because I wanted to make sure that it had as much power as it could have, and then I forgot to open up Thinkorswim. So that's what's up with that, right? Let's go over here and look at where SPX is at the open. I do have some things I'm going to chart here for today. If you see some stuff, if you have some things you'd like for us to look at, then go ahead and put them in the comments. Okay. Come on, baby. Hey, Tanya, the other Tanya. Hey, Ray, how y'all doing? Okay, so we look at the SPX. SPX open today. I'm on the daily chart. It gapped down. Yep, this is today, right? It gapped down and is going down some more. I believe this is where we are. Gap down and going down. I will fight the urge to sing the Mary J. Blige song or Rolls Royce, whoever is the singer, and then go down the rabbit hole of where were they going down to. But I won't do it today. I will not do it today. Okay, so we'll come back to SPX here soon. Alrighty. Let's look at earnings. So our earnings for this morning, well, yesterday after market close, we had Salesforce and C3 AI. HP was yesterday. Notice HP didn't get mentioned this morning. That was interesting that they talked about Salesforce but not talked about HP or C3 AI. This morning before the open, we have Foot Locker, Dollar General, Kohl's, Tanya Store, Best Buy, Hormel, Burlington, Birkenstock, and Cracker Barrel. And Canopy Growth, which is a cannabis people, CGC. And then after close today, we're going to have Costco and Dale. I think those two are both anticipated earnings. Marvel, Ulta. I've heard some a good anticipation for Ulta. I'm again not talking about any financial advisor because I'm not a financial advisor, but I did read somewhere. I read in multiple places that Ulta may have a little bit of a pop that happens. Again, everybody trades your own portfolio, but I'm just saying I saw something somewhere. Do your reading. Just do a little bit of reading and see what you come up with. Okay. I didn't know Ulta sold perfume. I knew that they did makeup, which is honestly overwhelming to go in the store. I don't even wear makeup. So of course, when I go in there, I'm way, way overwhelmed because I'm like, what is all this stuff in one place? But it's a good, I'm telling you what Ulta is a good thing to show you. It shows you just like the bread aisle and the chips aisle that you shouldn't feel like just because somebody else is doing something that you're doing that you shouldn't do it. All right. Because you go into Ulta, there's a million types of mascara, there's eyeliner, there's lipstick, there's lip gloss, there's all the things, and they're all in one Ulta store. It's like you can go in here and go nuts just buying mascara. So if you got a plan or a thought or something that you want to create, put it out there. Go ahead and create it. It doesn't care that somebody else is already doing it. None of this stuff is saturated. Okay, go ahead and put yours out there because none of those people are you. You got your own little spin. Put your stuff on it and put it in the market. I'm not saying put consumables, but whatever your thing is, if you doesn't matter if somebody else is doing it, you go do it too. If you got the passion to do it, nobody's gonna bring your passion. Okay. Adam Mancini. Yesterday, this should say 52.56. It should say 52.56. Yesterday, 52.56 was supporting SPX, and it's a sell trigger. After holding all day, SPX lost it literally at the close, triggering the next leg down, 52.57, then 52.50 were triggers 1 and 2, and they were hit. The market is going down for sure. I'm looking at the chart here in front of me. SPX. Plan 52.35 equals support. 52.57 and 52.66 are next up on the relief pop. Unless 52.66 clears, though, 52.18 and 52.21 will be next down. There's a 15-point gap between the ES and SPX right now. 527 on the call side for XSP and 521 on the put side. Okay, on the put side. Let's go back to the chart. Let's go back to the chart. Let me get myself logged in to the market so I can see some numbers when we start looking. Okay. What did we say we were looking at? Y'all see what SPX got going in the first 15-minute candle? It's just 52.49 is about 52.50 is where we are now. And we opened at 52.59. So we're down about 8 points. 8 points now, even though this wick is telling. Remember, overnight, this first 10-15 minutes is a lot of orders from overnight or pre-market orders. So we as sellers don't just dive in. We don't just dive in. Hey, Lisa, we don't just dive in. All right. I was going to look at QCOM. Let's look at QCOM, see what we see here. Current price on QCOM is 208.11. What did I say? QCOM. Okay, it's 208.11. It's the current price. What I see here, I did a little classy class yesterday and learned some more about charting gaps. Okay, I learned some more about charting gaps. So this is the key for charting gaps. Yes, get Ulta sells perfume. I did not know they did. Because I don't really buy makeup. I don't buy makeup at all. I don't really go into an Ulta. I went into Ulta just because I wanted to see Tabitha Brown's hair stuff, the hair things that she was selling. Oh, and they smell so delicious. So I was in there for that, and I don't really start a store I shop in. Anyway, to draw gaps. When you're drawing gaps, you're drawing a gap from the close to the open. Draw a gap from the close of the 1-day candle to the open of the next day candle, and then back it off based on what that candle does for the day. So it's not just body to body, and it's not just wick to wick. It is close to open and then back off to what the price action actually did. So looking at this screen, this red candle, this would be the close. I'm on the daily chart, by the way. This would be the close, right? And the top of this candle, the next candle down would be the open, right? Because a red candle means the open is at the top and then it's going down from there. But then you back off the gap based on the price action of that day. So, right, so we cleared from close to open. It opened down here at the top of this red candle. And then you back it off based on the price action that actually happened through that day. And then that is now the gap. Okay, put this in here. That's the gap. All righty, there we go. Now I gotta, I feel like I can agree with this philosophy because I was body to body. Other people were wick to wick. And I didn't agree that the wick to wick was accurate. I was more leaning toward body to body because it made more sense to me. But then when I listened to the information about whatever price action did that day, it did try to refill some of that gap. So now it's close. This is the close up here. Do a little bit of teaching this morning. Yep, this is the close up here. This was the close of that candle. Yep. Okay, this is the close of this candle, right? And then the open of this next candle was here. Okay, this is the open. That would be the open. And then back off based on the price action of that day. Yep, does that make sense to y'all? Come on, let me move you. Let me see if I can see the comments. I don't have any there right now. Okay, so that will be the gap fill on QCOM. If we're looking at, the trend of QCOM has been upwards. So I would probably go with still a put credit spread. I was looking at that. Now it did have a huge pullback from here. So we really could look at the call credit spread as well. This is the daily chart. This is the daily chart. So where'd you go? Where'd my mouse go? Oh, there we are. Right, because it pulled back from there. And this is 1 DTE. So we've got we only have one more day to stay in this. So we could look at 217.18 as a hard. This is a significant sell zone. I probably would go with that. There could be some motion here, some support here as far as 202. So it might even be something we can look at for an iron condor. Let's see what we can see if we switch over to the trades screen. It's sometimes so difficult to do. Let me see if I can move it to the same screen so that way I don't have to worry about that. I don't have to worry about changing. It's not as easy to do when you're not in Zoom. In Zoom, you just pick a new screen and you're good. In here, not so much. Okay, we're looking at tomorrow, and we're looking at QCOM. Okay, I'm gonna move this over a little bit, and then I'm gonna bring that back to the screen. Here we go. Let's go to single. What do y'all like? Do y'all like what does that imply? Back off, what does that imply? Based on the price action of that day. Yeah. So let me clarify then. So the full gap would be here, right? To where it opened. So, but during the day, this candle, the wick at the top there, this wick is price action from that day. The wick of the day we're bringing it down to for the gap. So we did the gap. Oh, come on. We did the gap here. Bring it down to the open of this candle on Wednesday, the 29th. But this wick here is price action that happened during the 29th. So it opened, it went up, did its thing, it came back down, it closed at about the same place. So I'm removing the price action from the day, like the new open. I'm removing that day's price action from the gap because part of the gap did get filled during that day. Okay, that's what I say about back off. Back off based on whatever the price action for that same day did. And then what's left is this part here. So the gap from 210.72 up to 213, that's now the real gap that nothing has filled at this point. That price action has not filled. Okay, I hope that's a little clearer. I'm sure we'll have some more of those to look at here in a second. But that's the information. This is I'm going to put a circle here. This is the wick we're backing off of. Okay, why don't you give me a circle? I want a circle. It's just drawing a line. I want a circle. Ay. Okay, let me hit it again. See if I can get what I want. This wick. Why are you drawing a straight line? Not what I want. Ah, la la. Well, you see where my mouse is. This is the wick I'm talking about is here. It is just right there. Like, oh my goodness. Hi. What lets me draw? Maybe a highlighter will give me what I want. This right here. All of this wick is what I'm talking about. I'm not sure if y'all can see that. It looks like it's very small. But this wick is what I'm saying is the price action from this particular day. And that price action filled the gap for that day. So we're not counting that as part of the gap anymore. Okay. I hope that's clearer. If it's still not clearer, let me know because I can, share it another way most of it. Anyway, this is Qualcomm. And then we see Qualcomm. Let's go see if we see some trades for tomorrow. So top, we see 217.18, so probably go up to 217.5. It has a 96% probability out of the money. So that's much higher than we need, right? So, well, it's got a plus minus 5. So let's go up at least 5 from the 207. That puts us at 212.5. Let's go at least there. That's an 84%. I think that's doable. That's a nice little compromise. 212.5, if we put in vertical, 212.5 is a 26 credits. If you do 212.5, 215. That's not above the gap. If you want, what did it take about? It is above the gap. So we can do call credit spread 212.5/215. You can do that. That is above the gap. If you want more support, resistance, help, whichever you're looking for, if you want more of that, then you can go up one more to, I don't think you need to go all the way up to 217, but 215, 217, that pays $12. Now, I don't think that personally is worth it because you're going to take in $12 for risking 250. And that's like a 5% return. And I don't think that's, the best thing you could do for yourself. 212, 215, you probably could work with. But if we look at even the support here, what says 202, let's look at the bottom to see if we see potential iron condor opportunity. We're going down, subtracting 5, it puts us in like 202.5. You can go there. Or, 202.5 is still below this support line. 202.5 is an 83% probability out of the money. 202.5, we've got $25 on that side. So if you did, both of those, the top one took in $26. The bottom one would take in $25 more. That's a $50, bring in for $250 of collateral. What did I say? 202.5. Yeah. Okay. Not financial advice, but it may be an opportunity for you. All righty. Or one side. If you feel like you only want to do one side, just go with one side, whichever side you want to do, and you can do, 2 contracts. That way you double the money too. But now if you do it that way, if you do 2 contracts on one side, you're also doubling the collateral. If you do one on each side, with tomorrow's expiration, then you're using the same 250 collateral. So you're not putting any extra money on the table. All righty. We cool there. Let's look at XLF. XLF. Let's look again at the gap, that gap thing I was just telling you about. Let's look at how to do that again. Okay. So we're coming from the 28th, which we're looking at the close of the 28th candle, the close here, going down to the open of the next candle, which is this line, because it's basically what's the thing called? A sword. But then taking the price action back up to the top of the wick. Alrighty, so we are taking in the fact that during the day, this one did fill some of its gap because the gap really was all the way down to here. So it filled some of the gap. Now we can move up a little bit more because we do know that today's action so far has the gap up a little bit higher based on this red high over here. No. Okay. This is the gap. Okay. And maybe it's the wording I'm using tomorrow. I'm just saying to uninclude, right? Or to take out the price action of that day. So if your gap fill, if your gap, the gap really is, if I can get it to pick back up, come on. Here we go. The gap really is from the close to the open. So this would be our body to body. This is the close of this candle, the close of this candle up here, and the open of the next candle here. Okay, so from close to open is where price gap down from the close to the open. But then during the day, this candle, this May 29th candle, had price action that took it back into the gap. It had price action that took it back into the gap. Where'd my thing go? Okay. All of this here is price action that went back into the gap. So we're not going to include that in the gap because part of it had been filled with this price action from the wick. Okay, so now I can take you off so I can move you back up to the top of this green of the wick here. We're going back to the top of that because that price action actually filled the gap. So what's left now is this part here. And I don't know if it should be, is it dark enough for you all to see? So that way, that may be, I don't want to, if you can't really see what I'm doing, that might be the thing. And the gap, even today, it's got a little bit of price action that went into it a little bit more. So we're taking this red part of the wick out. And what's left is the gap that remains to be filled. All right. So if we're looking here for XLF, I believe, has a little more downwards going. And we do know that the top of our gap and the bottom of our gap will play resistance. As we see here, I probably will go at the top of the gap, will play resistance. So you got 41.15 you have here. This support here hasn't manifested itself fully, or this buy zone formation hasn't really manifested itself at this point. So you can't really, count that. It probably is a support. This line here you see is a pivot line. That is an indicator that provides you pivots. So this line is showing that this was a pivot point. So you probably could use that as a support point, but we do need to still see what today holds. So if you're interested, XLF could potentially be another iron condor, but I would probably go with because we've been on the downhill ride, I'd probably go with a call credit spread. So let's go look at what numbers we see on XLF. I should be in my sim. That way I could push in I could be opening up some of these trades. 41.15. Let's see what we have as far as numbers. So 41.5 is a 92% probability out of the money. Don't know what kind of money we would look at as far as premiums, but let's see. If we did 41.5 and 42, 41.5, 42 doesn't really seem like much. 41.5, 42, actually, it looks a lot like a dollar, and that ain't what we're after. We ain't after no dollar. No, sorry, we're going to pay more than that in fees for the trade. If you're looking at the bottom, the pivot 40.70, if we're looking underneath, basically, it's a real tight little zone for XLF for tomorrow. It's got a plus minus 0.3. So basically going up a half point, going down a half a point, puts us at what, 40.40, basically 40 period. And that's a 93% probability of the money, 40.5 if you were feeling real risky. 40.5. 40.5 is also only paying $4. So I don't think XLF is a good move unless you decide you want to do, you want to widen the spread. That may, but honestly, I wouldn't. 40.41 makes it jump to $22. That's a big jump to change it to a one spread. And this is a call credit spread. No, this is a put credit spread underneath it. So if you did 40, 41. Nope, that's what went wrong with that. Let's delete that. I need 40.5, 39.5. That's what we need. I'm like, why is that jumping? Okay, it's only $5 for one spread. Now you could go to next week. If you believe it's going to do this thing and it's going to do it, and next week suits your, fancies better, then you could jump out. If you just really want to trade XLF, you really could go out to a subsequent week. All right. Now, y'all have heard me talk about multiple times how I'm a fan of going over the weekend because theta helps you. So if Thursdays, if you like XLF and you like what it's doing and you want more premiums than what it's offering, go out to another week. So you can see the 40.5, 40, sorry, not 40.5. 40 is an 80% probability out of the money, and 41.5 is a 78% probability out of the money. Let me see if I like either one of those premiums. 41.5, 42 is paying $7. Meh. 40, 39.5 for next week is paying $4. I'm not in love with it. Not in love, not a fan, not a fan. Oh, Tamara, wonderful. I'm glad you get it. I'm not a fan of that for XLF, but I do see that XLF has some downwards going. So it may give you opportunity in some of the other areas. And we're going to look at BAC. Okay, another financial. We're going to look at BAC. So we got I'm going to go swing back to SPX here in a minute. Okay, so I put the gap on here on BAC, right? And then from the close to the open, and then I backed off of the gap. But now you see today's price action. Today's price action has, okay, give me the gap back. What are we doing? I need you to let me grab this. Another arrow. I just need to grab this. Why are you not letting me grab it? Oh, there it is. Okay, so now today's price action has run up right into here. Right, so the gap then is what's left between the close and this price action before. So it's not, again, it's not wick to wick. This is I've heard wick to wick and I've heard body to body, which is what I was a fan of, the body to body, because the wick to wick I didn't agree with that. Body to body though, my thoughts have been adjusted on body to body. So from the close to the open, and then pull off, back off, or pull up, whichever, based on the price action, subsequent price action. So now the gap fill is here. Now we're looking at BAC. What would we see for some trades on BAC? I still feel like financials has some downwards motion. So I would probably stick with going on a call credit spread. I don't like that 39 is up where currently at. Oh, that's not too far away. 39 and some change, right? 39 and some change is where we currently are. And for today and tomorrow, we've got we only have the 1 day. Let's see if BAC gives us any opportunity for a trade today. It may not. These aren't big stocks. We can look. I also want to look at Morgan Stanley, maybe. It may provide us a little bit more money. The banking stuff doesn't always, because the financials don't really always like move a lot. So call credit spread 39.5 is above the gap. If you wanted to go to 40, 39.5, I think would be fine, but that's just me. 39.5, 40 is paying $10. That's a 20% return. Yeah, I can. I'm going to look at Enphase because we need to make sure our trade is doing okay, because I have Enphase too. Okay, so call credit spread on Bank of America, 39.5, 40. So we could also, you could also look at expanding it. 39.5, 40. To do something like that brings you right in here on top of that gap fill. Okay, 39.5, 40. Okay. All righty, let's see. Let's go back real quick to SPX before I move on too much further, because I want to make sure. Dun, 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 dun. Okay. Alrighty. SPX, we're on to the 15 minutes. See what kind of breakout we had. Did we have a breakout? And the answer is no. We did not have a breakout. This is our 15-minute candle. So this 15-minute candle would have given us the top here, given us the bottom here, right? And we're still in the middle. In the middle of it. We're still in the middle of it, right? Until it does something, then we haven't done anything. If we're looking at the whole gap thing we just talked about again, just to continue to make sure that we're understanding the close of yesterday, right, to the open of today. Now, there's been no price action above this open today, so we don't have to back off from anything. It's from the close to the open. But then in this case, it is body to body because there has been no upwards wick, which that upwards wick is telling us something too, or the lack of the upwards wick. Anybody know what no upwards wick means? What no upper wick, what does that mean for today? What does that mean? Anybody got an idea, a famous idea of what that means? Tell me in the comments if you believe you know, or you can guess, or you can think about it, or you can know, put it in there. Tell us what is the thought behind no wick on the top. Let me see if I see any answers here. Anybody know? Y'all know I'm a little bit ahead of y'all. Let me turn on my banner. Let's start with the chart challenge. It's starting up. Anybody know why there's no wick at the top? What does that actually mean? Okay, that was our look at SPX. I'll keep waiting for somebody to answer, somebody to respond. Oh, I see a comment that just popped up. The question, why is there what does no wick, or the absence of an upper wick, what does that mean? What does the absence of the upper wick mean? Johnny says, good morning. Tanya says, no upper wick means no selling pressure. Tanya Davis, or the same Tanya, says it's bullish. Do we agree? Do we agree with that? Don't just take somebody else's answer at face value. If a wick going down means selling pressure, but there's selling pressure, but it didn't make it, no wick going up, I believe it. Let's go. The buyers are confident. If the buyers were confident, would it not be going up? If there were strong buyers in here, would the price be going up? Like on this one here? Like on in phase? In phase lets you know the buyers are present. Okay. Buyers would have popped it up. Sellers would have came back in and pushed it back down. But if there's red and no wick up here, I don't know if I think that means bullish. I'm open to the discussion. Okay, in phase. We're talking here about in phase, and we'll come back. We'll swing back around to the no wick at the top. Neutral price action. Neutral. I think dojis show neutral price action. That means the buyers and the sellers are in agreement or close to agreement when you're with a doji. Sellers push it down. Okay. In phase, we've got support here at 125.42, and in phase is going on by this business. And I need to see what my trade look like because I have in phase. I have a put credit spread and a call credit spread, and I got 136. I did like you said, Tamara. Tamara, you were like, yeah, it like to gap and move. So I did what you said, and I went out further. I used the plus minus number on in phase. So I have 136 on the call credit spread side. And I got really good premiums. In phase pays pretty well. I'm going to keep that one on my list. Your place is on my list. Yes. Oh, no, that says, that's all. Don't say that. That song says your kiss is on my list. And I just changed it to your praise is on my list. That is not the same song. Oh my goodness. Not the same song. Hi. Okay. So anyway, let's look at the gap from the open, from the close, which would have been here, to the open, which would be here. And then this was an upwards moving one. So this would be the gap just from close to open. But then there's some downwards price action. So we bring the gap back down to the bottom of this wick. Okay, so this is our gap now for in phase. All right, in phase had this gap over here too, but it closed. The candle on Tuesday closed up here, and then it opened here. Close at the top, right? If it's a green candle, close at the top, and it opened here at the bottom. Honestly, it opened at the bottom. But all the price action took it right back up to this wick here. And then the price action from today has filled the gap. So this gap, this one up here I'm fooling around with, is now been filled completely. Okay. All righty. So... oh, wait, now that you're there, let's get you off because you don't go there anymore. All righty. This is in phase. Now, let's go see if I see some in phase stuff that we can see a top up here. Yes. In phase is currently, look at this monster candle here from March 11th. It came right into this huge red candle, and it's right there again right now. So it's got to get through this zone. Not just that, there's all these candles with wicks, basically shows that there's a lot of what they would call liquidity. I'm still trying to understand that whole term, but all these wicks up here let you know that price has gone up. This would be a supply zone, I guess you would call, because supply is at the top at resistance. So this would be a supply zone up here. There's a supply zone up here. And for those who understand supply and demand zones, I don't really a lot, but this is what is going on up here. Because supply and demand zones, a lot of times I guess they do correspond with support and resistance, but they are a little bit different. So from what I understand. So this would be a supply zone. Okay. But we also have resistance right here based on these candles. So in phase 130, right in the area where we're in is probably, you see it, the wick did take it all the way up though to 133. It has gone up into this area, 133. So time frame continuity has us still going upwards, but it's got to get past this zone. This has been a hard zone, even, so you can see back in January, February, even into March. This is a weekly chart. So these are all weekly candles. All these, and this has showed you that this is a pretty strong zone right where we are right now is pretty strong. On the weekly chart, weeklies are stronger than dailies. So if we go back to the daily chart, we do see that we're currently there and there's a bit of a gap below us, but we do have time frame continuity showing going upwards some more. So that's of interest as well. That's not what I wanted. Okay. So let me pull this side back over because I want to see this on another chart. I'm gonna go here and do in phase. What do you have? You said put credit spread, right, Tamar? Put credit spread. I would see the support here. This is a daily chart. Nope, this is a 4-hour chart. I would see the support being at the bottom of the gap, which would be down here in the 125. I believe I got 121 on mine. 120. Oh, that trade just closed. So the 121 put, let's see if we were looking at 125. That's what I see. Let me move this back over. Janae said, I miss Hall and Oates. Yeah, don't get so turned into a worship song like I was trying to do. Oh, Lord. Okay. So sticking with this week, looking at in phase, single, where I see the 125-ish. Let's see what we see for numbers. Plus minus 5. So subtract 5 up here puts us at 125. Look at there. And it's an 82% probability out of the money. So vertical 124, 125 is paying $16. $16, 14, 15 is kind of dancing around. That's a good return on a one spread for sure. Listen, Tamara, you don't turned us on to something. This let me make sure I put a note over here so that in phase stays on my look at list. Look at here. Look at here. So 125, 124. And we got till tomorrow, right? So let me see, we got us a line. Let's see, we got till tomorrow. You want to if you went under 125 and under that gap, I think you'd be, this is a pretty hard zone right here. I think you'd be, not financial advice, but I think you'd be okay. But you do see that we are in that liquidity zone I was mentioning. So that's why in this zone up here, you're going to see that resistance happening. But a call credit spread really above that zone is actually something you can do as well. So if you wanted to do, what's this up here? 135, which is a little high. I told you there's some resistance is really up in here, but I don't know if I really want to test it much. I probably would go up to about 50.133. Let's look on the option chain and see what top number we like. If you wanted to do an iron condor. Now, last week, some of us way last 1 week, last 1 week ago, some of us got caught on the call credit spread side. I told you I have 136 as my trade, and it's about $10 away from closing. It might be 15, but I'm going to go ahead and close it here because we're not fooling up with in phase till tomorrow and get my stuff run through. So 135 is a 76%, or 136 even if you wanted to go with 136. Let's see what the vertical is paying. 135, it's paying $14, and 136 is paying $14. So 136 puts you above this gap up here, and that's still $14, $15. Yeah. And if you did that 14 to 15 up here and you did the 17 down here, you're gonna pull in $31 between now and tomorrow. Shoot, I might have to go back to the other side because I closed my other side. Some of us is we. Okay, let me see. Let's see what we got in our comments. AV Go pays very well too. Take a look. Got to keep up the good work tomorrow. Yep, tomorrow. So I take the in phase because the premiums are well worth it. My preference is anything greater than 0.20 per contract. Okay. Some of us is we. What's some of us is we? Oh yeah, some of us is we. Yes, because I know Tanya, me and you both got in there, didn't we? Me and you both. But if you're on in phase and you're gonna do the iron condor, that's looking about $31, $32 at this point in potentially safe zones. So that may work for you. Okay. All right. What else was on our list? QCOM, XL, BAC. Also, go look at Google. We want to go take another look at SPX, see what it's doing. No, not SP. I want SPX. And I want it on the 15 minutes. Okay, this is SPX. Is it not? It is. 15-minute chart. This was the 15-minute candle. I'm going to just move these lines. It'll be easier that way. This was the top of the 15. And this is the bottom of that 15. Looks like it has now come out of the zone. So if you are trading the breakout, looks like it may be out. It's about 10 to 15. So it may be a time to start looking. Those who trade the breakout, the PDT hack, if you're going to trade the breakout, please be looking for that PDT hack as well. Don't fool up with SPX all day without some protection along the way. You need protection along the way. That is a church song. So I will get my songs right. Okay. All righty. So there we go with SPX. And when we were going with Google. Oh, look at Google. Lord of mercy. Lord of mercy. This is Google. Talk about some downward action. It's been going down since the market opened. Right? But it's coming into some support. It says it's a strong zone. It says strong over here. A little bitty words. Pivot machine gun. So it may turn here in this zone. So if you're talking about doing Google, let's be careful. But we do have a gap here. The close of this candle, the open of this one, take off some of the wick, not some of the wick, all the wick. And that could give us some support, some resistance. The top of the gap and even the bottom of the gap. 175.32 and 175.96. That's right in the same zone. Let's look and see what Google has to say, what Google has to say for itself. Call credit spread, what I would be looking at. 175 is a 75% probability of the money. If you want to go one more, it's got a plus minus 2.6, which puts you at 175, a little bit over. If you wanted to be safe and go to 177, you could. I want this to be a vertical, not a single. 175 is paying $31. 177.5 is paying $7. I would not go with that one if you wanted to trade Google. I would go with 175. CCS 175, 177.5. If you decide you wanted to jump in on Google, put you right in the middle of the gap, kind of not really the middle, it's more like put you at the bottom of the gap. This is 175 down in, where's 175? Down in here. This 175. Okay, right around in there. Let's look. I want to look on a bigger time frame to see what other stuff is going on, not just what's happening in this 15-minute window, but Google. Lord, look at Google. Can you say money, 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 money? That would have been money right there at the open on Google. Qualcomm. Oh, we looked at that one already. Let's go back to Macy's. I think we looked at Macy's yesterday. Not sure if anybody got into. I think we didn't really see any good. We didn't see any good trades as far as the money went for Macy's, but it's definitely going down still. This is today's candle. So if we were looking at a call credit spread, I would look above 19.5. Come on back. Macy's 19.5 to 20 is paying $11. 19.5, 20 is paying $11. 19.5 is right in here. Okay, you can, okay. 19.5 is in here. That's a support. 19.5 is here. Time frame continuity shows it's still on the downward ride. 19.5 paying $11. Yeah, for a 5-cent spread to make $11 off of it. Yeah, that would be a good call credit spread. Let me put us some numbers on here. Call credit spread 19.520 for tomorrow. We're looking at, remember, we got one DTE. And I'm not saying you take all these trades, but you decide which ones you really like. And then you partake. If you like one a lot, then put more than one contract on it. All right. If you really like, if you're still in your sim, we're still in sim May. If you're still in your sim, then get more comfortable with higher contracts, because I found that I've done it both ways. I've done it where I've leaned in on contracts and then get nervous, or I've done a lot across the board. What I found with doing the ones across the board is I have lots of things going at the same time, but there's so many things I have to keep track of and have to watch. If I have just one that I've gone in multiple contracts, then I just really need to watch that one or those two or three. And I'm not just one, maybe two or three. Versus going too wide, do multiples on one or two or three of them. That may be a good deal. Okay, let's see what Roblox got going. Let's go look at AV Go. We can go look at it, see what we got. This is Roblox. Roblox is kind of hanging in the zone right now. Got a support down here. Support here, and I see resistance up on top of 33.60 and support at like 31.85. But Roblox has been in here a minute, so it might be. Look at, can you say Iron Condor opportunity? Yes, you can. We've got 3 days definitely in this smaller zone here. We got 3 days right there. Let's go see if Roblox can give us something to do. Okay, Roblox can give us something to do. For tomorrow, I see 32.5 as the bottom. That puts us up in here. I wouldn't like that. I probably would go with 32. When you're doing an iron condor, you got a little more room because you're gonna make money on both sides. 32, and then the top is above 33.5. Oh, yeah, that's going to feel a little close. So 32 and 34, we probably could go with. Let's see if we went 32. 32 is going to pay $3. 32. 31, 32 is going to pay $4. I'm not in love with that. And 34, 35, 44.5 is going to pay $3. I'm not in love with that. If you widened it out, and you're going to pull in about $10 total on Iron Condor. Not amazing. Not amazing, right? Unless you got closer. If you got closer here, get a little closer. You get a little closer. 32.5 and 33.5, which is going to feel a little uncomfortable. 32.5, 33.5. 32.5 is paying $8 for 50 cents, and 33.5 is paying $9. So you can take $17 in on $50. That would be better, but you're close. You're at 32.5, 33.5, and that's going to be a lot more uncomfortable. Yeah, because any movement, basically you got these wicks, that's at 33.2, and this wick takes you down to 32.3. So I think based on these 3 candles here, it probably could be done, but I want you to definitely do what you're comfortable with doing. And some people wouldn't be comfortable going that close. You wouldn't be comfortable going that close. Okay. AV Go. Let's go ahead and take a look. I think semis are going to cool off too, because everybody on the thing that's running hot really is NVDA. Everything else is kind of in the chill zone. Everything else is kind of in the chill zone. Okay, Roblox. We're looking at what I say was next. AV Go. AV Go has a gap from last night. Come from close to open, then pull back off of the wick. Okay, this is our gap fill in this gray area here. AV Go is a big boy. It's a big boy. So you've got to it's probably going to be a 10 spread or a 5 spread at least. Yep, right around current price is a 5 spread. So you need to have your mind right if you're gonna go with AV Go. Those premiums do look nice though. Let's go see what we see. Okay, and put this back on single. Above here, I probably would go with a call credit spread. Above here looks like plus minus 28. That puts us right around 1,400, right? 28.14 and some change, actually. 1,400, 1,402, somewhere in there. If we were to change this into a vertical, this is 2.5 at least when we get away from it this far. 1,400 is paying $50 for a 2.5 spread. That's a 20% return. Yep, 2.5 is the spread, taking in $50, and this is a 80% out of the money I think I came up with. 79.80, 1402.5. $14.05, not $14.50. Okay, that puts us right down in here. It's right down in here. Above this. You could do a bottom as well if you were feeling that. I don't know if I would just yet. These are pulling back some, but I would look to see, your comfortability, whichever side you think you liked. Below here, if you subtract 28 from that, we're at what, 50 or 45? This becomes a 5 spread down here. It's an 80%, but it's a 5 spread on the bottom. So let's see. Vertical 1345. It's paying $77 for 500 in collateral. That's still pretty good premiums. You just got to ride it. Oh, this is for tomorrow. Lord. That's really good money if you're talking about one day. But that's really good. I mean, so let me see. PCS 14, 30, 35. Is that what I said? Should you put both of those on? Ah la la. You put 2 of these on at $50 a piece and $77 here. So $177 to leverage 500. $177 you pull in and put out 500. Let's see what the kind of 35% return in a day. That might reserve some looking at though. Okay, Tanya said, I'm love AV Go right now. All right. All righty. So AV Go was on the go list. I think I have 1 or 2 more. I said I was going to look at Abercrombie and Fitch, so I still will do that. UAL. United Airlines is just kind of, it had this big old green day yesterday, and then it's now chilling. I wonder what happened yesterday. They had to do all this. It gapped down and then ran all the way back up. Wow. I don't know if it's got a green time frame continuity. Let's see if it can give us some put credit spread numbers. You're right there at the bottom, 51. The bottom of this wick, I want to say, is 51.96. 51 is a 74%. Nope, wrong one. 51 51 is paying $13 on United Airlines for tomorrow. 13% return. Don't forget, we do still talk about closing them up early. I hope y'all are buying into that, closing them up at the 60, 70%. Tanya, what you couldn't do if the 5 spread is not comfortable for you, I see your eyes there. You can do 2 or do 1 of the call credit spreads on AV Go. Was it AV? Yeah, that was the call. Do 1 or 2 of the call credit spreads. Those are 2.5 spreads, and that was the one that was paying $50 for a 2.5 spread. So just do one side. Don't do both. Don't do the 5 spread side. Just do the 2.5. Okay. So this is Abercrombie and Fitch. Abercrombie and Fitch had a big old run yesterday after earnings, and it did pull back, didn't drop like a rocket. I think this is a what's called a fair value gap. So for those of you who understand ICT and understand fair value gaps, I don't. I've never learned ICT, but that's what this green thing is. And I think this, my thinking, or what I think I've heard just in passing, is that I don't know if this gap feels or if it partway feels like to the 50% mark, which is where you got this line here in the middle. So you can use that 50% mark as your support potentially. But then you've also got resistance up here at the top where it hit and came back down. It is, for the day, it is red because, of course, the candle for the day is red. But let's see what a smaller time frame shows us for Abercrombie and Fitch. Well, it's been coming down. It's been coming down. So it does seem to be trying to go back up, though. But for the week, it's green, of course, and the day and the hour are both red because we're in the first hour of the day, just a little outside the first hour of the day. So I would probably look on the call credit spread side if I was fooling up with Abercrombie and Fitch, and I would do up the 190s in that area. Let's go see what the money looks like. ANF. Abercrombie and Fitch. What did I say? 190, 195. Plus minus 6. So that puts us at what? 185, which would be right here, about 75. You can go up one more. 185 or 187.5 could be good. 185 is paying $50 again. 185 paying $50, and 187.5 is paying $12. 185, which 185 is going to feel close because it's right down in here. It's in the middle of this action for today. That action. It's in the middle of the action. Yeah, 185 is right up in here toward the top of this red candle. This is 185 where my mouse is, about this area. Will there be some more downwards? Could very well be. Could very well be. Yeah, I see what you're saying. Tamar says, Tanya, I'm going to study AV Go over the weekend. Looks like I may step away from SPX 0 DTEs. I like the premiums, but haven't looked at 5 spread. So I feel like SPX 0 DTEs definitely offer the opportunity to rinse and repeat your money quickly. Where I think we do see issues, and I'll say we see issues, is you want to get in earlier and earlier. So the earlier you get in with SPX, the more you end up exposing yourself to the whims of the market. So that part can be a little scary. If we're doing something that's weekly, but we'll pay the premiums you're looking at, well, shoot, I'm thinking if AV Go is paying like this on a Thursday, what did it pay like on Monday? What did it pay like last Friday for this Friday? I mean, if you got these some good premium, now of course you're exposing yourself to them multiple days, so you got to contend with that as well. But today's Thursday. If AV Go is gonna pay like this on a Thursday, you know how they say they pay out on Thursdays. People get their paychecks. But look at it. I mean, you know, everybody's got to be comfortable. But I know that when you're doing the dailies on SPX and the zero DTEs, unless you're willing to wait until 3 o'clock or whatever, then you may be, you know, putting yourself into some, I won't say risk, but you may be putting yourself in harm's way. Maybe putting yourself in harm's way. Okay. We have covered a lot of stocks this morning. Let's look here. We're still in Sim May. Let's close out strong. We got 2 more days, or 1 more day of May, not 2 more. 1 more day of May. We're going to close out Sim May. You know, make that work for you. If you're ready to go live with something, you can go ahead and go live for next month. Now, keep in mind, what we're doing next month is our Start with the Chart and Make More Profits Challenge. That's what we're doing next week, from next month, from June. Is that next week? It is actually next week. From June 3rd to the 7th. It's coming quickly. June 3rd to the 7th, we're going to have our Start with the Chart challenge. It's a free challenge. If you want to get the recordings and the quick Q&A and you want to do all the extra stuff with me, then then the VIP is $47. If you're one of my members, there's no reason you don't have to pay for anything. You're basically already grandfathered in. If you're not a member if you're not in my membership, you're going to need to either sign up for it for free, or you're going to need to pay the $47 for the VIP. Either way, you're going to need to enroll. If you're not a member of mine, you need to enroll. You need to sign up. You can go to educatortotrader.com and sign up for the challenge if you want to be a part of Start with the Chart. And we're going to talk about all the things that go with charting. We're going to talk about, you know, where do we chart? What are we looking for? Support, resistance, and trend. We're going to talk a little bit about indicators. We're going to just a little bit. We're going to talk about some strategies. It's going to be just all the, you know, it's going to be a good basic plus situation. It's going to get us started, because I know there's a lot of people who are not charting. There are people who are not charting. They're taking what's given to them. And I always say, when I provide that resource on the weekend that gives you the strikes, but then like on Tuesday, this last Tuesday, when I even though I gave a resource that gave all those strikes, when the market opened on Tuesday, a lot of those things had jumped. Either they jumped up or they jumped down. And the numbers that I had were still in the ballpark, but some of them were not. So you needed to have looked again at your chart to make sure you agreed with the numbers that I put there. Now, I mention that all the time when I put out that graphic. People are like, oh, you said 125. I'm going 125. Well, that's not a good place if the stock price is at 127 and I gave you 125 as a call credit spread number. Prices move. You need to look at the charting. And the only way you can do that is if you know how to chart, which I want to make sure that you know how to be self-sufficient master traders, because that's what we're after, is making people be self-sufficient. If you're not in the membership, but you want to be, go ahead and sign up for the membership. We have our morning call, which is here this morning. We have weekly training call, which tonight is going to be at 7. So if you're in my membership, we're doing that tonight at 7. Coaching call is going to be Saturdays, always the first Saturday of the month. This week, we're talking about how do we manage our credit spreads, manage, you know, the ones that are breached and whatever. We're going to be doing all that this weekend. Okay. This Saturday. Sign up at educatortotrader.com. Go over there and get yourself registered. Tamara says, yes, SPX 0DT are really, really great, but entry is tricky. Only power hour works for me. Anything earlier, I've gotten breached many times. Who you telling? Which is why we came up with the PDT hack to help with that. Getting, if you're getting in earlier, you need to do something to lock in your gains for sure. You need to do something to lock in. Our trader declaration. I declare I'm a great trader. I declare I'm a successful trader. I declare I'm a focused trader. I declare my wins exceed my losses. My accounts grow more and more each week. I'm a wise and a knowledgeable trader. I always make smart and lucrative decisions for my portfolios. I declare I'm a level-headed trader who does not trade my emotions. Come on, say it. Even if it ain't true just yet. We call those things that be not as though they were. We try to be strategic. We try to be non-emotional traders, but we're still working towards it. We're working towards it, Jesus. Okay, Lord, it's you who gives us the power to get wealth. You teach our hands to war with the purpose of establishing your kingdom. Help us today to trade wisely and strategically in order to fulfill this purpose. Give us more than enough so we can have what we need and enough to be a blessing to others. In Jesus' name, amen, amen, amen. Okay, we've got a good day ahead of us. I've given you several things that you can do to opportunities. Several of those. Tanya says, I'm interested in zero DTE, but I have a problem following during the day while at work. Yes, that's a thing. That's a thing. If nothing more, if you're going to do zero DTEs, you need to make sure that you're putting on alerts. If you're going to do zero DTEs, you must do alerts if you can't watch it. Okay, because it's just asking for trouble. Things that you're doing, which is the weeks. All right, let's do that. All right, everyone. I want you all to have a great green day. I want you to stay green and let's get this money. If y'all need me, I will be in the Telegram and we can maneuver the market together. Okay, I'll see you all later. Goodbye, everyone. Goodbye. Bye.